Well, friends, welcome back. So we'll be continuing our second session. I am sharing the screen right now. Just a minute. So we'll quickly recapitulate what we have learned so far. Then we'll be learning the new things. So by this time I think screen is visible to you. You are able to see
Yes,
the
sir.
screen now.
Yes, sir.
Okay. So what we have learned so far, I have explained you that this is the content of your first chapter. All these things I have explained you. I had also explained you what is the use of financial accounting, cost accounting, management accounting, and what we deal with the subject financial management. It is about managing money, that means collecting money, using money, and returning money. And this collection, money collection has to happen from financial market. Therefore, one need to know what are the products available in the financial market, in which form these financial products are available, what is the component, what are the components of the financial market, one also supposed to know that thing. Then I explained you why it is necessary, or what is the importance of this subject financial management, why it is necessary to learn the subject. Then we took an example. If we want to start a business, then we have to think about the project, what project, then where from money can be arranged, then money can be arranged at what cost, then how to handle financial activities. These are the main concerns of a finance manager. Then I explained you that business finance involves four stages broadly. First is we need to decide what is the asset. Second stage, we need to determine what is the investment involved. Third is we also need to determine what will be the expenses for my day-to-day activities, or what we call it as the working capital. And stage four, we need to decide. For stage, what we have to decide, where from we should arrange the finance. We call it as the various source of
Yes,
finance. Is it? And then I showed you
yes, sir.
this particular picture. I explained you that suppose you are the finance manager, then what you have to do, you have to, before, in order to implement your ideas and in order to invest money in a project, first of all you need money. That money has to be collected from financial market, and once the money comes to you, you know money has got a cost, then you will need to invest it, and you have to convert it into some kind of asset, because money as such doesn't give you any return. It is the real assets which will be giving you some kind of
Yes,
return.
sir.
And you have to invest it in that real asset,
Yes, sir.
and the real asset will generate some return, and the return will automatically flowing from that asset to you, and the finance manager will be having some of that money. And here you have to take a decision that how much if this money is to be paid to the market, we call it as the payout, and how much of money is to be retained by him, we call it as the retention. So these are the activities. And I told you that we will be classifying all these activities into three kinds of decision. Decision one, I told you, it is about financing decision. Decision two is investment decision, and decision three is about, who can say what the third decision? Can
Dividend.
anybody say? Dividend decision. Right. Now you have to help me that if you are identifying, if you are indicating this activity one, what is activity one? Can you say? What is this activity one? Anyone can participate. You can unmute and talk. What is activity one?
Financing disease.
What is that?
To arrange finance.
To arrange finance. To arrange finance, this can be what kind of decision? What kind of decision is that? Can anybody reply? I told you three decisions: investment decision, financing decisions, and dividend decisions. Now, this arranging finance, this first activity is what kind of decision?
Financing decision.
Very good. Financing decision.
Financing decision.
So you are able to identify this is a financing decision. Now, now coming to the second activity, that's activity two. Activity two. Are you understanding what is activity two? What is that exactly? First, we
Investment
understand
decision.
that this is about
Investment decision.
activity
Investment.
two. It is investment decision, because here the finance manager takes a decision of converting this cash into asset. So we'll be calling it as investment decision. That's good that you are identifying. Now you see what is happening here in activity 3. What exactly happening here? That asset is generating some return, the return is coming to the finance finance. Okay, I told you three kinds of decision: investment, financing, dividend decisions. Now, is it investment decision? Yes or no? You reply.
Sir.
Yes
No.
or no?
No.
No. Is it financing decision?
No.
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 Is it dividend decision?
Yes.
What is dividend decision? Dividend decision means you have to take a decision that how much you are going to pay back to the market and how much you have to retain. Here, frankly, are you taking a decision here? Suppose you have invested in money in a house. So if you have invested money in a house, rent is generated, the rent is coming to you. When rent comes, do you take a decision? Do you decide whether you will be receiving the rent or not receiving the rent? Do you decide? Do you
No.
No,
decide?
it will come automatically.
It will come automatically. That means that's what. That's what. Once you are saying it will come automatically, that means no decision is involved. This you have to keep in the mind. No decision is involved. And if at all it is not coming it automatically, that means something is wrong in your investment decision. If your investment decision is right, then it should generate some return. If it is not coming, then your investment decision is wrong. But you cannot say that this is
Yes,
a
sir.
decision. Here you don't decide. We don't decide it. It flows automatically. Is it not? So you have rightly identified, and that is what I was expecting of you, that you should be able to know that there is no decision involved here. But where decision is involved, here is some decision. 4A, here you are deciding that out of this money, something is to be paid to the financial market and something is to be retained. Okay. And what kind of decision is it?
Yes, sir. Dividend.
Which one? Please be little louder.
Dividend.
Dividend decision, right?
It's dividend decision.
It's dividend decision. And you see, this is in fact one decision. It is dividend decision, one decision. One decision means suppose my total earning is 100. If I am deciding to pay 40, that means I am deciding to return 60. Is it not? Therefore, I am saying it is 4A and 4B. If I am deciding to pay 20, meaning I am deciding to return 80. Is it not? If I am deciding return 70, that means how
Yes,
much
sir.
I am paying?
30.
30. Right. So you can say this is payout decision or this is retention decision. And accordingly, many times some of you might have heard my retention ratio is this one or payout ratio is this one. Suppose I will say payout ratio and retention ratio reflects your decision about dividend. Suppose I will say my payout ratio is 60%. Can you tell me what is my retention ratio?
40%.
40%. Right. If I say my retention ratio is 20%, what is my payout ratio?
80%.
80%. Because out of the 100%, I have something I have to retain, something I have to pay back. Right. If I know the payout ratio, so I can decide my retention ratio.
Yes.
Right. Understood. So now you have seen these are the various kinds of decisions. Now,
Yes.
having understood this with this background, now we have to learn some theoretical part that what is that investment decision, what is financing decision, what is dividend decision. We have to see, and we have to see how various chapters in our syllabus is arranged. Our chapters are arranged in like this. I told you all these decisions are financial decisions. We are not dealing with non-financial decisions.
Yes.
When you run a business, you have to take both financial decisions as well as non-financial decisions. Let us say you are taking a decision to appoint a person. It might be an HR related decision, a non-financial decision. Okay. But when dealing with the money part of it, that is financial decision. In business, you have to deal with financial decisions as well as non-financial decisions. And these financial decisions you are classifying into three broad categories. Please read them. What are they? Some of you please read. What are these decisions? All financial decisions I am classifying into three parts. Can you tell me what are these three kinds of decisions?
Investment decision, financing decision, and dividend decision.
Good. Investment decision, financing decision, and dividend decision. And coming to investment decision, there are two chapters we have to learn. If you want to learn all the techniques of investment decision, there are two chapters you have to learn. What are these chapters? Please read, some of you.
Capital budgeting and working.
So we have to, first chapter is the capital budgeting, which is the very important chapter we have to learn. And inside that chapter, we will be learning various techniques that will be helping us to take capital budgeting decisions. And second, one more kind of investment that deals with a kind of short-term investments. We call it as the working capital decisions or working capital management. So one more chapter. Both the chapters are equally important, right? But you have to keep in the mind that capital budgeting as well as working capital, both the chapters deals with investment decisions of the company, which is again a part of financial decision. So in our syllabus, these are the two chapters which talks about investment decision. Okay, coming to financing decision,
Yes, sir.
we have to here also you have to learn two chapters or two areas you have to learn. Can you tell me what are these two areas?
Cost of capital and capital structure.
Yes, you have to learn two areas, two subjects here. One is cost of capital. Cost of capital is a part of financing decision, which is ultimately part of financial decision, and other part is capital structure. Right. Under cost of capital, what we'll be doing, we'll be able to find out what is cost of equity and what is cost of debt and what is the cost of other source of financing. Every source has got a cost, and we'll find out what is the cost of these sources. So that is important for us. Unless we know the cost, how can we take an investment decision? Is it not? Even if you go to the market,
Yes.
first thing you ask that what is the price of this thing? What is the price of potato? What is the price of
What is
onion? What is the price of tomato? What do you want to know? Then only you can take an investment decision whether you will be investing money on that particular item or not. Is it not? Okay, so here also we need to know what is the cost of capital.
yes, sir.
And after computing this cost of these individual components, then we will be computing a cost which is called as the weighted average cost of capital. In due course, we'll be learning that thing. In short, we call it as the WACC. Because finally, we'll be using it in a combination. Is it not? Suppose you can buy potato, buy onion, buy tomato, but ultimately what you'll be using, you'll be making a curry out of it. You have to use it in a particular combination. Okay, is it not? So you have to decide that what is the combined cost. Then only your investment decision will be proper. So that is the purpose of teaching you that particular chapter, that you should be able to know what is the cost of individual components and what is the overall cost or the weighted average cost of capital. Okay, and in capital structure, we'll be learning some theories. There are some theoretical aspects are there where you'll be learning that which kind of capital combination is better to achieve the objective of financial management. Ultimately, what you want to achieve, which combination? Combination means how much debt, how much equity will be better. These aspects we will be learning here. Related to that, one more techniques that is called as the technique of leverage. Under these financing decisions, also that aspects we will be learning. Okay, leverage aspects that is also in our syllabus, we'll be covering this. Okay, so coming to financing decisions, three things we are learning: cost of capital, capital structure, plus leverage. Leverage is not a decision, but you can say that is a part of capital structure decision. Okay, leverage is it. Understood? Okay.
Yes.
And the third
Yes,
thing
sir.
we discussed is about dividend decisions. There also you'll be learning various kinds of dividend policies and theories relating to the business decision. Which kind of dividend decisions is better? You'll be learning in this chapter. So now you have got an idea that you see all the chapters are important. Okay, I'm not talking for the exam point of view, examination point of view, definitely all of them are important. But if you want to run a business, you want to understand the business, you should have clear idea that these are the various kinds of decisions are taken and these are the techniques available. Right. So in your syllabus, every care has been taken that students are equipped with all the kinds of techniques to take, let us say, capital budgeting decisions. Various techniques you will be learning. With the help of those techniques, you will be able to take investment decisions. How to manage working capital, you need to know. And regarding financing decisions also and dividend decisions also. All these techniques will be helping you to run a business or to understand the business successfully. Okay. Any query you have at this stage?
No, sir.
Okay, fine. Thank you. Now will be,
Yes,
yeah. Any query? Anyone?
the leverage means.
What is the meaning of leverage? Okay, I'll be telling you at appropriate time, but at very basic level, still, since you've asked that question, I'll be telling you. I told you one thing that regarding capital structure. Okay, capital structure means you need capital to do a kind of business, isn't it? Yes or no? Yes or no? Are you listening?
Yes, sir.
Okay. So if you need capital, then capital can be brought from various forms. You can bring capital from debt sources. You can bring capital from equity sources like this. Okay. A particular combination of capital. Let us say I will say debt 20%, equity 80%. Or somebody say I will do business with debt 60%, equity 40%. So different combinations are there. Okay. And different from combinations will give you a kind of disproportionate reward. But that means you will arrange a capital structure in such a way that by putting less effort, that means with less cost, you can earn more return. Okay. When you talk about the leverage means you are creating a kind of lever. Lever, in the physical science, what is lever? Lever is an instrument by using which you will be putting less effort and you will be getting more reward. Is it not? That is the concept of lever. Lever in physical science or in physics we talk about. That is what the lever. Effort will be less, but reward will be more. Same thing, same leverage concept will be applying in our capital structure. Here also we will be creating a combination of capital in such a way that cost will be less and return will be more. That concept is called as the leverage. Okay, are you getting me now?
Yes, sir.
Okay, in appropriate time when we'll be learning that chapter, these things will be explained to you very thoroughly. Okay, right now just have an idea. This is about, when we talk about the leverage, we are talking about something about a kind of combination of capital structure through which we will be able to get more return. Fine. Now, coming to this part, this is in fact a not exactly definition, a kind of explanation of these decisions. First, we'll understand what is investment decision. It relates to selection of assets. Investment decision is about selection of assets. Just now we have seen in our example, right? So, investment decision is about selection of assets, and you have to deploy your funds on these assets. So, you have to decide on various kinds of assets on which funds can be deployed, funds can be invested. That is investment decision. It's aimed at committing resources which are available internally or externally. Internally means your equity funds or debt funds. These has to be committed in some projects. So that is about investment decision. Investment decision deals with commitment of resources. It deals with how resources which are scarce are committed to the objective of organization. Resources are always scarce. Money is limited. You can bring it from different sources, but ultimately funds are limited. And since they are limited, you have to be very careful in taking investment decisions. That should not go waste. Right? It should definitely give you a return which is more than cost. Suppose you are taking a bank loan at 12% interest. Right? Would you like to make an investment? Invest that money in such a way that will give you 10% return. Would you like to do it? You will do a business which will give you 10% return, but you are taking a bank loan at 12%. Will you do it? Yes or no? Are you going to do it or not? Cost is 12%, return is 10%. Will you do?
No,
No.
sir.
Nobody will do that. Is it not? So resources are scarce, so that has to be invested very carefully. Money is limited and money has also got a cost. And these investment decisions are called as capital budgeting decisions. In our material, capital budgeting decisions are investment decisions. right? A part of this decision
Yes,
can
sir.
be also working capital decision. So all kind of investment decisions, you can say something is called as the long term investment decision, something else short term investment decision. This short term investment decisions are working capital decisions.
Working capital.
Working capital decisions. Will be there is a separate chapter on working capital. We'll be learning that chapter also in due course. Okay. Now the second kind of decision is, what is the second kind of decision?
Financing decision.
Financing decision. It relates to acquiring optimum finance. We need the best finance. Best finance means maximum finance we want, but at a very low cost. Is it not? That is the optimum finance means maximum possible finance with minimum cost. So that decision we will be calling it as financing decision. Okay, it's the next step for executing investment decision. To execute investment decision you have taken. You have decided to buy
Yes, sir.
this bike, but how to execute? For execution you need money. So this is the next step of executing investment decision is financing decision. Right. Here also you have to deal effectively with fixed capital as well as working capital. Working capital management also has to be taken care of. It deals with where from funds are to be obtained, where from you will be getting money. Naturally, that means that you have to have some idea about the financial market because that is the place where funds are available. And you also it also deals with funds are available at what cost. You should be able to decide what is the cost of funds. You should be able to come to, and what is the financial risk associated with that source of finance. Some sources are risky. Okay, risky means there is a commitment that you have to pay that much of interest or that much of cost, even if you do not earn any profit. So that is the risk associated with these kind of sources. One should understand. So it demands a skillful evaluation of the risk. Finance manager should be able to evaluate that what is the risk involved in all these kinds of decisions. And again, what is the impact of this decision on farm's profitability? That means if I take finance from this source, how my profitability is going to be affected, whether profit will be more or profit will be less. That also has to be dealt with that decision. And in this decision also we have to deal with selecting a good financing mix. Financing mix means a good combination of debt and equity. Which combination will give us maximum return? That is desirable. That kind of capital structure is desirable. Is it not? So this decisions will be helping us to deciding the best financing mix. These are called as capital structure decisions. Understood? What is financing decision?
Yes,
Yes,
sir.
sir.
Okay. Now, third kind of decision is about investment decision. These are linked to the financing decision. In fact, every decision is linked because depending upon your financing decision, suppose you have depending upon your financing decision, your how much money you will pay, how much money you will retain, you have to decide. For example, you have taken a bank loan. Bank loan means you have taken a loan means whether you are earning profit or loss, that doesn't matter, but you have to pay interest. You know how much money has to be paid back. Is it done? You don't have any choice. If you are collecting money through equity, then you have a choice. You can decide how much to pay and how much to retain. But there is a bank loan where there is a fixed commitment that you have to pay interest. So you have hardly any choice. You have to pay the interest. Is it not? So that is in that context, it is said it is linked to the financing. This it deals with the quantum, how much is to be paid, and periodicity. Periodicity means how frequently would you like to pay once in a year, or once in a month, or in every quarter, or half yearly. When you are going to make the payment. So that quantum and periodicity is dealt in this kind of decision. That is how much and how frequently cash rewards are to be paid to the owners. Then what is the amount to be paid and amounts to be retained? That's what we are discussing from very beginning. That what will be a retention, what will be your payout. Okay. So here we will be deciding dividend policies and what is the optimum payout ratio. These are the two things which will be learning under the head dividend decision. Okay. Understood three kinds of decisions.
Yes, sir.
Sir,
Yeah, any query you have? Tell me.
sir, actually, which kind of decision will be taken first? Because in the first chart, you taught us that first we have to arrange money, then that will be invested in real asset. But here, the first decision is investment decision.
Yeah,
So, which decision is taken first?
normally.
Investment or financial decision?
Okay, let me tell you. Normally, you take an example for a, let us say you have taken a decision, you have already taken a decision to join the course company secretaries. Is it not? Is it a decision or
Yes,
not?
sir.
Okay. So I trust that is your own decision. If it is your own decision, now tell me first of all, the decision to joining a course like a company secretary, is it a investment decision or financing decision or dividend decision? First, you identify what kind of decision is that.
It is an investment decision.
It's an investment decision. So you feel this is the area where you have to invest some money and invest some effort also, right? It's a purely an investment decision. Okay. Now you tell me, first you arranged money, then take your decision. You at that time also you had several options. Not that
Yes,
company
sir.
secretary is the only course. Let us say you have several options. Let us say could have been chartered accountancy, could have been cost accounting, could have been MBA, right? Could have been company secretary. But you selected, okay, these are the options. So I selected a particular option. After deciding, then what you decide, what you did after that? Did you arrange money after that? Or you arranged money first, then you decided? What you have
First
done?
decide, then I will arrange
First you
money.
decided, because once you decided, then you might have gone to the institute's website. You must have seen this is the cost. You must have gone to the prospectus. Then you arrange. Okay, this is the cost. Let me arrange. So that is what normally happens. Normally we decide what is the investment. Then we arrange money for that. Then financing this. Okay, but don't take it as a rule. There might be exceptions. Suppose you have a limited money. Already you have. So you know you got, let us say, 5,000. Then you have to take an investment decision which is possible with that 5,000. In that case, you can say that already financing decision has been taken. There is no other way. Then investments which are only possible within that much of finance, then you can have a choice. But normally, investment decisions are fast, then financing decision, and finally, in due course, dividend decisions will be taken. Okay. But if you again I repeat, but activity wise, in decision wise, investment decision is fast. But which activity will be started fast? Let us say you said that you have taken decision company secretary to join company secretary. That is your first thing, investment decision. But when actually activity started, activity started when you arranged money. See that? That is
Finance.
the first activity. You arranged money, then you joined the course. So activity wise, financing first, investment second. But decision wise, investment first, financing second. Is it clear to you?
Yes, sir.
Okay, exceptions are possible, but this normally this is how it happens. Okay, now all these decisions are, you have to keep one thing in mind, all the decisions are not independent. That means they are related, very closely related. So just like that, we have seen your investment decision financings are related. If you have this much of money, then only you can think an investment which is possible within that much money. And for investment, you have to arrange suitable finance. And once invested made, accordingly profit will be generated, return will be generated, you have to distribute dividend. So all these decisions are interrelated. Okay, they are not independent. The moment you are taking an investment decision, you know how much money can be generated by way of return. Is it not? Yeah, and you have to you know that whether finance is possible for this kind of investment or not. So there you can say all these things are interlocking ideas, they are interdependent. Fine. Okay.
Yes.
Okay. Now having understood this, so
Yes.
we'll take a break here. In fact, we'll stop here our today's class. Next class, I'll be uh, teaching you about this various kinds of decision criteria and etc. which are there in your first lesson. On the first chapter, we'll be trying to complete perhaps in the next class. Hope you got some broad idea. If you got some specific query right now, you may feel free to ask. Otherwise, we'll wind up today's class. Any query you have?
No, sir.
Okay, then. Thank you very much. We'll catch up in some other day in some other class. Thanks.
Thank you, sir.
Thank
Thank you, sir.
thank you.